please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. Welcome to Halftime Report. I'm Sumaira Abdi and with me is Nigel D'Souza. Hi, Nigel. Good afternoon. And, for the market, well, not a whole lot happening. So we're trending with just about a positive bias right now. The Sensex, though, is up about 100 odd points. The Nifty is past that 10,900 mark. But the gains are few. The mid-cap index also, at this point in time, just about trending with minor gains.
That's right. Sumaira, if you just take a look at it, the Nifty is trading mildly in the green, but a bit of a rarity is that the India VIX as well is moving higher. Otherwise, in fact, it's inversely proportional. So when you see the Nifty move higher, you see the VIX cool down. Now, today, in fact, it's up close to around 7%. So let's keep that on your radar as well. Remember, we have the big event. That's the budget 2018. That'll play out in the next 10 sessions approximately. And that explains why, in fact, the IVs on both sides are moving higher. For this series itself, there's a considerable amount of writing at the 10,900 call as well as put. So, in fact, it seems that the smart traders, they are playing for a bit of a range.
All right, those are all our top stories. It's time now for movers and shakers. So let's tell you about all the big buzzers in trade. And, well, it's almost lunchtime. So let's start off with Jubilant Food for another day going. Mangalam.
Another day going, the stock has run. In fact, over the last 1 year itself, it's moved up around 150%. And after the results, the numbers were all there for us on screen. I remember you and we were discussing about how good these numbers look. Margins, the highest since the third quarter FY13. SSSG, the highest in the second quarter of FY13. And the key question then in the earnings call the analysts posted was that what led to the same-store sales growth? To which the management said that it's actually the frequency of orders rather than the price increase that the company has taken or price-related issues that have aided the same-store sales growth, and that is a positive. So on the back of which, going into numbers, the stock was trading with a consensus EPS for next year of 30 rupees. They posted a 10 rupees EPS. So most of the brokerages have maintained that as a run rate and increased their earnings estimates by anywhere between 15 to 28%. Most interestingly, some of the brokerages which were negative on the stock, the likes of Kotak, they've upgraded the stock from sell to buy. Nirmal Bang had dropped coverage and they've reinitiated coverage on the stock. So there is no seller on the stock as far as Jubilant FoodWorks is concerned. So it'll be very interesting to see going forward with the elevated expectations, does the company go ahead and meet the estimates? Currently, it's trading at 56 times 1 year forward earnings, even after the 40 rupees EPS target that most of the brokerages have given. But we've seen price rises across the board with CLSA leading the pack with a 2,800 rupees target on Jubilant FoodWorks.
Okay, all right, Mangalam, you have kept the pizza going in the last couple of trading sessions. But by the way, I think Bank of Baroda should be up for you on the screen. There were a couple of flashes that were playing out for you, and the stock has recovered from the low point of the day. Why is that? In fact, the news that was flashing for you was that, in fact, they're looking to sell roughly around 44 lakh shares that they have in NSE at a base price of around 900 rupees per share. Now, if that's the case, what they'll be raising is roughly around, at that base price, is 390 to around 400 crores. That'll be close to around 1% of their total market capitalization. So that's just some news coming in on Bank of Baroda. And that explains why, in fact, the stock has spiked up. 43.9 lakh shares, base price of around 900 rupees.
Total consideration is under 400 odd crores.
Yeah, 395 crores, exactly. So that's a bit of news that's coming in there for Bank of Baroda. But the other stock that's moving around is JP Associates. That one, in fact, has spiked up today. It's still trading with some gains. Volumes extremely high on that one. Varinder's been tracking that space very, very closely. Varinder, tell us.
Well, good set of numbers coming in from JP Associates. Especially, I remember after they sold their cement business, Nigel, I remember we were discussing what is left now, okay? Because they're selling every single asset to pay down the debt. The commendable thing on this group part is that, yes, they have sold their assets. Yes, I think they are the one among many, few people around who are actually sold and reduced their debt. You know, yes. The interest cost for them has come down from 900 crores to 200 crores on a Y-on-Y basis. And look at the numbers. You can't compare Y-on-Y, so you got to watch quarter-on-quarter because they sold their cement division in the base business. So on a quarter-on-quarter business, what the business which is remaining with this company, income is up 32%, EBITDA is up 259%, and margins coming at 12.7% compared to 4.6%. Yes, they are still making losses, but operationally they are doing really good. Important is if you just see segments, the construction and hotel business, small, but they have turned profitable. Cement sales is up 26%, EBIT is up 113%. The margins, EBIT margins have doubled. Real estate has picked up, sales up 63%, EBIT up 78%. So even in the remaining business, it's doing good, and especially under still, there are legal cases which are still pending. In spite of that, I think good performance by the company. Stock was trading out 30 rupees. It came down to some 19, 20 rupees. I think whenever that burden of that legal case moves out, that will be the right time to look, what happens next for JP Associates.
All right, Varinder, thanks much for that. Well, oil and gas is the flavor of the day, and Reliance has posted strong numbers on Friday. Naveen is here with the lowdown. Naveen.
Well, strong numbers indeed from Reliance, Sumaira. To begin with, the biggest highlight being two key things. One is the petchem margins, the other one being the Jio posting its first profit at the PAT level. Now, beginning with the consolidated numbers, revenue growth was strong at around 9%, but the margins, they were way above the street was expecting, came in at almost 17.5%. Remember, the highest expectation on the street was close to 16.5%. Apart from this, PAT also grew by almost 16% at around those 9,400 levels versus an expectation of around the 8,450 crore mark. So, segmental breakup, if you see petchems, clearly the capacity utilization has been clearly seen in the operational leverage for the petchem business, and the margins over there are increasing. Jio also, with 1,062 million subscribers, 162 million subscribers, they have been able to post an EBITDA of almost 2,500 crore, and that has been clearly sinking in. Refining has also been an inline set of numbers, and the other segments like the retail segment has posted a 450 crore EBIT. Overall, strong set of numbers. That is the reason why the stock is up in trade today. Back to you.
Okay, all right, Naveen, thanks so much for that. Well, by the way, that's the disclosure that's up for you in the screen. Network 18 and TV 18, the companies that operate.
Moving very, very rapidly. Look at Just Dial intraday chart. In the last 5 minutes of trade, if you can pull out Just Dial, I think the results are today. And the stock has moved out very sharply. And NIT Technologies, we all have been talking about Mindtree, which is up 7.5%. But look at Just Dial and NIT Tech in the last 5 minutes of trade, sharp up move, happening in all these mid-cap IT stocks which are moving up.
Any news on NIT, Varinder? Anything you heard?
No, I think the numbers were reported were very good.
Yeah, numbers were strong.
Numbers were good. I think I read a report few days back where Motilal was having a target of 800. I think it's all earnings which are coming up.
All right. That news can be attributed to the strong earnings that we've seen, besides some buzz here and there that we heard about it. But the stock, the last couple of days has given you around 8 to 9% returns. But let's talk about a couple of other stocks. So Just Dial is the other one as well that Varinder was talking about. So let's get that as well up for you. Moving up and moving up on strong volume. So keep an eye on that one. But ONGC and HPCL. Now, Varinder has been doing the numbers all of last week. In fact, over the weekend, yes, we got that news. It's going to be good for ONGC. For HPCL, in comparison to what numbers we were hearing, it was much lower.
Well, yes, done deal, done marriage after a long time. But important is we all know the details of at 473 and everything. But the most important thing here in this deal was that there is no open offer. There is no delisting of HPCL, and that 473 price, what you are watching out for, this is an off-market transaction. That means that this deal will not happen on exchanges. There will be no block deal which will happen. That means that price will not show on the screen. Because the government is just an interstate transfer which is happening in, and hence no open offer, no delisting happening for HPCL. Who wins in this case? Clearly the government. Why the divestment? We were talking about 72,500 crore target, which was down to nearly 60,000 crores, and with this they reached 92,000 crores. Clearly, at the time when indirect taxation was a problem, I think divestment target is really moving up. Fiscal deficit, people are expecting 3.4%. It will come down to 3.3% or even 3.2% in FY18. Bond yields, they will improve clearly. ONGC, I think ONGC is a clear winner in this case. Imagine a company which is earning an ROC of 10%, getting a company which is earning a ROC of 25%. They will, the total deal size is nearly 36,000 crores. They're already sitting on cash, on books. Even if they have to go for debt in this case, the debt equity ratio will only increase from 0.2 to 0.4 times. In that case, at 8% interest cost, their EPS will still be accretive by nearly 5 to 6%. Some are saying 7 to 8% in FY19 itself. And with crude moving higher, it will be really for ONGC. HPCL, as I said in the morning also, the bulls are disappointed because no open offer, nothing happening in, the premium is small because, don't compare 473 guys. The first time when we heard about this ONGC and HPCL, the stock of HPCL was trading at 480, 490 rupees. From there it has corrected and everything. Important is what next? Will there be a MRPL and HPCL merger? Yes, there could be, because Mr. Surana also mentioned the same thing in the morning. But again, keep that in mind that this again could be just a merger and no open offer or anything which could come in that case. Will ONGC sell stake in IOC or GAIL? That is very important to watch out for. That is why you are seeing GAIL. GAIL is down 3% today. IOC is down 1.5% today. There is that overhang which is happening on some of these stocks, IOC and GAIL particularly. And in FY19, clearly, you will see Oil India and IOC deal happening for sure. And which clearly means the biggest lesson to take away is this, that the government got saved this time in FY18 because of this divestment. 30,000 crores coming more than what they expected. So I really don't expect whether there could be any tinkering with capital gains in the budget or not. Because if that happens, then divestment could be a problem in FY19.
Okay.
All right, thanks, Varinder. Also, the Secretary of the Department of Investment and Public Asset Management, DIPAM, Neeraj Gupta, spoke with CNBC TV18 exclusively. He says, and I quote, "This acquisition is in line with the government's commitment to efficiently manage its investments in CPSEs and the value of its enterprise in this space."
Well, on ONGC, Secretary says that this is a dream acquisition for ONGC, through which it has got access to the middle and downstream operations in oil and gas value chain. It can now improve on economic and operational efficiencies through further consolidation within its group companies.
Well, and on HPCL, the DIPAM Secretary adds that HPCL will continue to be a listed, professionally board-managed CPSE company, and as part of a large oil and gas group, can exercise various possibilities of economic expansion within and outside the group companies.
Well, we also spoke to the managements of both the companies earlier today. Let's listen in to what they had to say.
It is a logical thing to do because MRPL is a standalone refinery with no marketing arm, and HPCL has got a more marketing capacity than the refining capacity. Last year we sold around 35.2 million metric ton, while our refinery capacities are shorter than that. So having MRPL along with us helps us in bridging that gap. HPCL, ONGC and MRPL board have to sit together and decide. The formal discussion on that have to start. But I believe that if there is a value which can be created, we should try to make an effort to do it the earliest possible.
Part of this funding we'll do it from our internal accruals. Then, as you rightly said, that we have stocks of IOCL and GAIL. And apart from this, we have taken required approval from the board for short-term borrowing. We have tied up all these the borrowings with different banks. So, that the stocks together, we have something like 25 to 30,000 crores. Banks, we have tied up close to 50,000 crores of short-term borrowing. As of now, we have all these options open. First, we'll definitely access our internal accrual, how much, whatever amount we decide we can spare, and thereafter we'll work it out, whichever works out beneficial for us.
And HOEC also posted a good set of numbers in Q3. Revenue growth has been strong as well as margins. Production from Assam has added to revenues and the bottom line. This morning we caught up with P. Elango, the MD of the company, and he says that he expects FY19 margins to be about 75%.